Good morning. We will pay attention to credit purchases and returns today. The following entries appeared in the financial records of flour traders. Purchase goods on credit from Leaf wholesalers with a normal sales price of $18,000. Receive 10% trade discount. Purchase goods on credit for $16,000 less 15% trade discount. We will first calculate the first purchases from Leaf wholesalers. 18,000 minus 10% will give me 16,200. So before you record the entry, you will first calculate what is the amount after trade discount, because 16,200 is your purchase price and that is the amount that you owe them. Then for the second one, there's 15% discount, so 16,000 minus 15% will give me 13,600. Goods were returned to Leaf wholesalers for $360 before the trade discount was taken into account. So therefore it means that we have to go back to the original entry and see that we obtained 10% discount when we bought the goods. If we return the goods, we also have to deduct the 10%. On the 360 Rand that was returned, we will deduct the 10% of 36 Rand and record the entry for 324 Rand. Receive a credit note. If the credit note is received and they tell you what is the amount, it means they've already taken the trade discount into account, and this is the amount that you will record for the entry. First of all, we will indicate that inventory asset increased with 16,200. Creditors liability increased with 16,200. The second entry, the inventory increased with 13,600, and the money owed to the creditors increased with 13,600. On the calculation that we made to determine what was the value of the inventory that we purchased, we will credit inventory to reduce the inventory on the credit side, and we will debit creditors control to decrease the amount that we owe the creditors on the debit side. The credit note from Tree wholesalers, they gave us the amount so we don't have to do a calculation. So we will credit inventory and debit creditors control with the full amount. Inventory is debited to increase assets with 16,200. Creditors is credited to increase liabilities with 16,200. A credit invoice was received from the creditor and we recorded it in the creditor's journal. When we receive a credit note, we will record it in the creditor's allowances journal. We will decrease the creditors to decrease liabilities, and we will decrease the inventory to decrease assets. When trade discount is deducted from the purchase price to determine the cost price of goods purchased, the trade discount must be deducted when the goods are returned if the amount on the credit note is not provided and they just give you the information of the value of the goods that was returned. When a credit note is received, the amount on the credit note will indicate the amount that they will reduce your account with. That means they've already taken the trade discount into account.